All right, good morning, good afternoon, and good evening to everyone, and welcome back again to the live session here. It is about 8 a.m. Eastern now. We are moving into the early hours trading in the New York session now, and let's get started with a few chart study with a long term or a bigger picture in mind. We are just entering into a new series now. Let's set our eyes on the bigger picture and then look into the smaller ones, and that would help us decide, or position ourselves for the rest of the series, I suppose. uh, if you would like to see the December 1st, I think that was Friday. High was formed at 1940 in the euro, so that could be a that could be a big resistance now for the rest of the series. Just for example, okay, let's start off with Bitcoin. Actually, personal level, I've already shorted this once again. We're just waiting for a bit more confirmation to send across a trade signal on the Telegram network. Let's understand the wave counts here. On at least a 4 hour chart, it's given a bearish signal. How about the daily chart setups? If you were there with me in the last session, we were talking about a potential 5 waves movement, almost complete now with a high of around 11,547. This is not the exact high. Net Dania doesn't operate or doesn't show price action during the weekend. The weekend price action went up to 11,700 plus. So that was a low and a new high, and it unfolded into 5 waves again on a smaller time frame. Let's maybe 4 hour chart. All right, with a bearish divergence scenario as well. It is giving us, once again, it is giving us an indication about a bearish divergence or potential bearish divergence seen on different time frames, indicating yet another push lower. We'd want to see a break, or we should be able to see a break below 8,900 or 8,700, and that would actually confirm a bearish reversal. So let's not, if you are an aggressive kind of a trader, you might want to go short around these prices. Have your stop loss around 11,800 900 levels, and there you are. On a shorter time frame, you already have an engulfing bearish in the picture. So with the stop around 11,800 900, you can go short, but please look into your trading lot size. It should be quite less, actually. 0.01 on the MT4 platform is $1 for every 100-point move. If you are trading 0.01 on your MT4, then it is approximately $1 for a 100-point move. I'm just mentioning it here. For 100 points, if your lot size is 0.01 on MT4, so kindly look into your risk management. I like trading 0.01, that's it. Not taking too much of risk. 1 to 2% of the equity should fall under, I mean, it should fall under the purview of 1 to 2% if you're trading maybe 0.01 or maybe 0.05, right? So aggressive traders might want to still go and take that short call, but if you are a conservative kind of a trader, which I presume most of them are, that's why I haven't given an aggressive trade call on the network. They will want to wait and allow prices to break below uh, 8,900 levels. Believe it or not, if this wave count holds to be true, I mean that's what the daily chart is telling us a story. It's producing a pin bar. If you notice, well, it is producing a pin bar or a shooting star on the daily chart. That is a bearish trade signal, a potential bearish trade signal in the coming session. That is tomorrow. All right. So waiting for another 24 to 36 hours will not matter much. All right. Then we can really initiate. I mean, a break below 8,900 confirms break of previous wave 4 if it is, and then we can confidently sell on the subsequent rallies. Now if you go by the 5 waves count here, and if this reversal is for true, then just by taking a simple retracement of the entire, I'm just taking into account past 6 months or maybe past 5 months rally, that itself showing a potential 61.8% support coming in at 5,500 levels. And that's a huge 50% correction of the entire rally from 2000 levels onwards. 5573, and that area also falls very close to the previous wave 4. There you are, that was the previous wave 4, which is around 5,800 900 levels, and 61.8% is falling at 5573. So watch out for a 3-wave corrective drop. We are not talking about anything further than this. We are simply talking about the July 2017 rally. All right. Now, which degree it is being worked upon, this chart is not showing, but at least on the current, it could be a fifth wave, which could trigger even deeper corrective drops. But at least for now, we should be fine with a soft target of around 5573. But that is still a later stage. First break should be around 8,900 or 9,000 levels. Once it breaks below 9,000, subsequent rallies should be sold with enough confidence. All right, so just hold on to your nose maybe for a couple of thousand points. Let it break 9,000, and then you can go short if you are a conservative kind of a trader. Aggressive traders won't let this opportunity, or should not let this opportunity go off their hands. Please remember, wave 4, our 4-hour chart has shown enough bearish divergence for a continued drop lower. All right. So that was Bitcoin, and let's now look at euros. And okay, Euro USD, we had issued an aggressive kind of a long just for an intraday purpose. If you are there with me right now for that particular trade, I would request you to move your stop loss to a break-even level now. It was about 45. I'm also sending across a message on your telegrams. Because that's an aggressive trade, we don't want to take or we don't want to take unwanted risks. Now we are at a break even over there. Alright, let's understand the daily chart wave count first, and then we will gradually move on to the hourly charts and see what's what's in store for us. A quick labeling of the counts, potential wave counts. That is wave 1, 2, and then it is either 3, 4 and 5, which is a definite possibility, making us the first wave of a higher degree, or another probability could be it's not 5 waves, but it's just about wave 1, wave 2 and straight up there as wave 3. If it is wave 3, then the current drop could be defined as wave 4, and on the other side, if it is 5 complete, we have the first wave A on the lower side. Subsequently, that could be wave B on the lower side, or the retracement side, and we might see a continued drop into wave C, which can go all the way towards 1420 at least, or even lower. Alright, so either it's going to go towards 1480 levels, produce a flat as a wave 4, or it's going to go towards 2100, 2200 levels. But the question is, not from this level, not from this price, from where, even if it's pushing or going to push higher towards 2200 levels, from where should we go long? That's the big question. Always 2-3 probabilities are there in our hands, and we will have to take a bit medium term views and play accordingly. So what would be in store on an hourly chart? Let's touch upon the 4-hour chart first. Presuming that euro can go north and push towards the 1.22 levels, we're not letting any option unfold or remain untouched. Okay, let's presume that it's going to go up. All right, for that, at least it will, or it should rather, correct towards the Fibonacci 61.8%, that is falling at around 1.17. So we're right now focusing on that drop towards 1.17, just for the sake of an extremely short-term intraday level, intraday trading opportunity. We had suggested to go long around 1890, the target of around 1890, and then reverse. So how is that going to happen? How is that expected to drop? The entire drop from 1960 is towards 1800 levels was labeled as wave A, then the subsequent rally as wave B, and we are expecting yet another drop at least towards 1700 levels. All right, and our presumption is that we've got wave 1, we are expecting wave 2 on a corrective manner, in a corrective manner, and then we will take a review. Let's take a review around 1700 levels to see if it is going to reverse, continuing its uptrend, cutting loose into wave 3s and 4s and 5s, or should we remain on the south side for a continued drop lower towards 1.15 or maybe 1.14. All right, so in short, we want to sell rallies in the euro, at least for now. Okay, now if you had taken the counter trend, you're making around 20 pips intraday. I mean, it's up to you. You can take profits or you can remain, but I don't know if you saw the educational video today, which defines the fractal nature of the market. It says that, see, what are we doing right now? We went up to the daily chart. I did a wave count there, and then we came down to the 4 hours and another wave count, or a projected wave count. Then we're watching an hourly chart now. So what are we actually doing? We are going a step down, or we are putting each wave on the higher time frame under a microscope so that we can view the sub waves of that particular wave. Let's say if you look at this wave on a 4-hour chart, you will just see one straight drop. On a daily chart, you will see one straight drop, but that's not the case on the hourly chart. You are seeing good wave counts here. Sub waves 1, 2, 3, 4 and 5. All right, and then sub waves A, B and C, and sub wave C. Wave C is being worked upon, but again it has taken a slight pause, like the entire drop from 1940 towards 1840, and it's producing a counter trend, or should be producing a counter trend rally towards the 1890 1900 level, and then continue its drop towards the 1700 mark. That's what precisely the wave theory is all about. Okay, I'm not suggesting aggressive longs here right now. In fact, I'm just sending out a message to exit Euro USD aggressive. All right, I'm already doing that. Okay, done. So we are we are absolutely flat. Now the boundary that is being worked upon is still between 1940 and 1835 to be precise. We would want to wait a bit more, maybe a bit more, and allow the counter trend to complete. We are expecting the counter trend to go and terminate around the 1897 or 1900 level. Okay, you might want to take a split. All right, 50% you might go short at this price, or and the remaining 50% you might want to take short around the 90-95 mark. Resistance or your risk will go about 1960, and the take profit levels towards 1700 levels. Okay, so try and take your shorts again. It's just a revision now. We have discussed this earlier. Sell around 1900, stop around 1960, above 1960, and then take it all the way towards the 1700 mark. This is the most probable wave count at this point in time in the euro. All right. Let us look at the pound now. Let's go a bit longer first, larger time frame, and then let's come down. Since this is for the first time that we are looking at the daily chart on pound, I think we will okay. If you look at I cannot compress more than 3-4 years. Actually, we have already discussed the first time about the wave counts on a weekly chart. Right, the corrective rally which began 6th of October, and that is 2016, terminated at 3600 levels. That was a triangle, and then so it was A, triangle B, that is A, B, C, D, E, triangle, and then wave C, finally getting terminated at around 1.3600 levels, 3650 to be more precise. Okay, so the corrective rally which unfolds into 3 waves. Let's plot here. Capital A, capital B, and capital C. All right. So, and if you would like to know what wave it is formed or terminated on the higher degree, that is precisely wave 4. Okay. That means we might have already initiated the 5th wave, and you know that the 5th wave unfolds into 5 waves again. So let's do some labeling here. This is 1 of 5, okay, and then subsequent rally again unfolding into 3 waves, A, B, and C. Which is wave 2. And if this wave count is correct, I mean, we are going to see a wave 3, which should be very sharp and very fast actually. Just a moment, I'm just setting up this chart. So wave 3 should be going towards 1.2, straight towards 1.2. The soft target, the first soft target that we mentioned here is around the 2800 mark, but it's not going to stop. It should not be stopping there actually. We're going way below 1.2 and even lower to complete 5 waves. This is the entire structure you should be keeping in your minds. All right. And once again, a warm welcome to those who are joining us fresh or tuning into these live sessions for the first time, or just beginning to connect with us. These that's what precisely we are looking for, a larger picture in our mind, and that's why all the trade calls that we are taking in pounds specifically are all selling on rallies, right? Where the risk is remaining, I mean, your risk will go towards 3650 plus. Sell on rallies until prices remain below 3650 plus, and you should be fine. All right. Once again, it has given us a good trading opportunity. That's the first leg down. Maybe the second leg up. Should be flashing lower now. All right. So pound selling on rallies still remains very much on cards. I think another entry point has already been triggered just around the 35 mark. If you are just tuning in and not taken any trades, you should be looking to go short, but please place your stop loss above 3650. Right, and kindly look into your risk management. 1 to 2% of your margin account is a good way to trade. Similarly, dollar index, larger term picture. I am not extending the sessions beyond 30 minutes. The file becomes too long for watching beyond 30 minutes actually. That's why I'll be cutting short my sessions, or keeping it tight for about 30, maximum 35. So that's what we're expecting in the dollar index as well. Maybe wave 1, 2 and 3, or 3, 4, 5 complete. We are keeping both the options open. It could be wave 4. In that case, it's going to go lower below 91. But if it is not, and if it is wave A, then we might be seeing yet another high, yet another rally, which can push prices all the way towards 98, 99 levels, right there. Alright, we'll be watching this closely and trying to play both sides. Right now we are more inclined and more focused to buy on dips, and that's what precisely we have done. We have issued a trade call to go long in the dollar index just around the 92, 90 and 93 levels. Again, it is approaching that price action quickly. It's already 93.7. You might want to go long again around 93, or maybe get out to 92.90. That could be another small sub wave, and then pushing it higher towards 94.20. That's what we are looking for now. I think it should be around it should come through in the next 24 to 48 hours. It's about to fill in the blanks, right? So let's see if this blank is getting filled up on the north side. And the last chart that we would like to touch upon is gold, and amazingly surprising, but gold is again a sell on rallies case study. Right, we've got wave A, and then we've got wave B, either wave B here or wave B there. 3 waves, and then we are looking towards the 1200 mark on the south side. Selling on rallies still remains very much on cards. The recent boundary which is being worked upon in gold is between 1290 and 1270. Try and sell around the 1282 mark, and place your stop loss above 1299, that is above 1300. To be more on the safer side, I've issued a stop around 1306 as well. But selling on rallies still remains a safe trade strategy for the yellow metal. You can become a very busy kind of a trader if you are trying to grab both sides, but then it is also risky. Like say for example, if that's the boundary which is being worked upon, there is going to be a counter trend rally. You can play that counter trend rally as well. You never know, it might stop ahead of what you're targeting. It is risky, but I've seen players, traders playing both sides. But if you're a conservative kind of a trader, look to go short between 1280 and 1282. Have your stop loss above 1300 and target below 1250 and then 1230. Alright, so let's bring this session again to a pause now. And as always, if you are liking it or if you have any questions, you can write to me at Japee@yahoo.com and do consider joining the free Telegram channel. That's the link https t.me/Japee for all the current trades or towards the trend and the counter trend and the aggressive trades with specific entries, stop loss and take profits, right? And next session will be live UK times 2:30 AM Eastern tomorrow. Until then, good luck to your trades, brothers, and take care and God bless. Goodbye.